Hey, what's up guys? John here. Zillow now offers 1% down payment loans. 1% down payment loans. Bank of America is offering 0% down. They're bringing out all these loan products that I think are extremely concerning. When we look at 2005, 2006, 2007, we're looking at these ninja loans, the no income, no job loans. People would just basically apply. They would say, yeah, this is how much I make. And they would get 2, 3, 4 houses on a bartender's salary or a hairdresser's salary. They'd have $1 million plus real estate portfolio.
My firm offers ninja loans. No income, no job. I just leave the income section blank if I want. Corporate doesn't care. I was a bartender. Now I own a boat.
Now we're starting to see very, very similar things, except this time around I think it's going to be a lot darker, a lot deeper than what we've seen in the past. I think this recession is going to be really, really bad, because people just aren't going to have the capital. They're not going to have the liquidity. They're not going to be able to withstand inflation, the cost of being a homeowner, and all these problems that a lot of people aren't prepared for. And I think a lot of smart and savvy investors are sitting here looking at the writing on the wall, realizing this is probably going to be the greatest investing opportunity of all time. And I'm going to break it down for you clearly in this video of what's actually happening. If you're a renter right now and you're thinking, hey, I'm going to go out there and invest in real estate, hold that thought just for a second. I'm going to show you some really interesting data points that I think a lot of people need to take into consideration. Please hit the like button. When you hit the like button, YouTube is going to share this content to educate other people about what's really going on in the housing market. And if you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, you have a negative item on your report, don't let it sit there. In many cases, it can sit there upwards of 7 years from the date at which it was filed. One late payment can drop your score upwards of 180 points. So you can go from having an 800 credit score to being in the mid-sixes. It's a tragedy to have one negative item on your report. And if you're looking to invest in this upcoming recession, some would call it a depression, you're going to want great credit. You're not going to want to miss this opportunity. We'd love to help get you there at GreatCreditFast.com. Take a look at this. Zillow offers 1% down payments to attract more home buyers, right? 1% down payments. And this, they say, is because they need to, this is wild, lower the potential barriers to homeowners, right? For those that qualify, right? For home ownership, for those that qualify. We're seeing some very interesting things that we didn't see in the last time around, 2005, 2006, 2007. Now, we're starting to see stuff like this, like new law charges home buyers $100 to help minorities with down payment. This was Washington State has passed it, right? So, and this is active in Washington. Here, Bank of America tests no down payment mortgages in Black and Hispanic neighborhoods. No down payment mortgages. Now, from someone that has both rented and owned property, being a homeowner is more expensive today than it was a few years ago. Everything is more expensive. Everything. And I'm talking about repairs on your property, property insurance, property taxes, everything is continuing to climb. And so if someone can only afford a 1% down or 2% down payment, that's a red flag. It's a red flag because the cost of being a property owner is likely only going to radically increase. Look, for example, this Zillow offer, for example, right now is in Arizona only, and they are now going to begin pushing this. I believe they're going to start to probably push this nationwide. But on a $400,000 property with 3% down, because they're going to contribute 2% towards your closing cost, and the buyer will come up with 1%, you're looking at a $4,100 payment. That is a big number. And this, by the way, is conservative. Interest rate 8%. Interest rate right now for the average credit score in America, which is 698, is 8.224%. If you have a slightly better than average credit score, which is a 700 to 719, it's 8.153%. So this 8% is probably somewhere in probably somewhere in the 700 range, because I'm sure there's some loan officers that could probably do better than this. So say 8%. You're looking at $4,102 a month. To comfortably afford that, you probably have to make $13-14 grand a month, right? $13,000-14,000 a month, $160,000, $170,000 a year. If you're making $160,000, $170,000 a year, you should be able to put down 5 or 10% down, like ideally 10% or 20% down. If you can only come up with 1% down payment and you need to finance this, it's a red flag, because the moment that you have, let's say, insurance going up, right? You have these costs that are going to continue to climb. People aren't going to have the money. Right? They're just not going to have it. Rising insurance costs start to hit home sales. And this is, if we look at what happened in Hawaii, look at what's going on in Canada, you look at what happened, you have Fort Myers, you had that disaster that happened there, you had the situation that happened in Fort Lauderdale, the massive flooding, you had the fires in California, you had Allstate and these big insurance companies pulling out of California. You're starting to see a big shift and change in property insurance. What I think is going to happen is we're going to see rates in most areas skyrocket the next couple of years. So people might look at this number and be like, hey, I'm renting right now. I'm paying $3,000 a month, $2,800 a month. I can afford it. I'm going to go there. I'd rather be a homeowner. But what people don't realize is that most of the people that are homeowners right now either have their home free and clear or 2 or 3 or 4% mortgage. Right? Not many people out there are sitting on a 7.5% mortgage. Not many. And that's why mortgage applications are at a 28-year low. But what's going to happen is as this economy starts to change, insurance gets more expensive, and property taxes continue to rise, like it's happening nationwide. Property taxes are continuing to skyrocket. As this begins to happen, you're going to see a lot of these people that have these low mortgage rates, 2, 3, 4%, 5% mortgage rates, that are locked in, that they were locked in based on their former debt-to-income ratio. But the debts are continuing to rise as food gets more expensive, utilities gets more expensive, property taxes, insurance, everything changes. And so these consumers, these investors, these property owners are now stepping in a situation where they're house poor and they have nowhere to turn. They can't refinance their property because they would go from a 3% to a 7.5 or 8% mortgage. And so what are people going to do? They're going to start turning the keys back to the bank. But many people looking at these products saying, hey, 1% down, hell of a lot better than renting. I'd rather own it. But what people don't realize is if they were to buy it, right, this property, they were to buy it, and they put 1% down, the cost to sell a property in America is about 10%. You have 5, 6% cost just for realtors, just for real estate agents. Then you have transfer taxes, you have closing costs, you have, something comes up in inspections, you have to credit the buyer. You're looking at 10%. So on a $400,000 property, it might cost you 35, 40 grand just to sell it. Just to sell it. And if people are buying these properties and they only have 1% or 2% or 3% down payment, and there's just going to make more sense to them just to turn the keys back to the bank, which is not going to be great for the buyer because the buyer's credit's going to get absolutely destroyed. It's not going to be great for the neighborhood because the comps in that neighborhood are going to get greatly, reduced. When you start seeing foreclosures popping up all over the place, it's not a great thing for, comparable homeowners. Now, when they're incentivizing people to go out there and buy properties today at record high home prices and record high mortgage rates, I believe it's a major disservice to the home buyers. It's a major disservice to Americans. And I think that this is a really dirty move to try to push this on the American people. What people should be doing right now is saving money, putting themselves in a stronger position, getting ready for a harder world because the world is about to get a lot harder. They don't talk about this. They don't talk about what's actually going to happen in the job market, the labor market, artificial intelligence, robotics, technology, all these changes that are going to be happening gradually over the next couple of years that are going to have a substantial impact on housing valuations. So if you are someone renting right now and you are looking at these products saying, you know what, I want to become a homeowner, my advice to you, save money. Really put yourself in a really, really strong position. Increase income as much as humanly possible. Get your credit score as high as humanly possible. Put yourself in a position to where when you start to see distress, you can go out there and you can pick up deals that you can comfortably afford. How many people can comfortably afford $4,100 a month for a basic home in America? That is absolutely nuts. You could rent for half of that. And somewhere like Arizona, probably less than half. You could probably rent something in Arizona maybe for $1,600 a month, $1,500, $1,800 a month. It makes more sense to do that and save a couple grand a month, invest it into your business, do something like that, than trying to get lured into one of these down payment programs. They've been pushing this for, look at this. This came out a year ago? Yeah, September 2022. Like they've been trying to push people into becoming property owners for the last year and a half at the height of the market. Where were these products when the market crashed 2011, 12, 13, 14? They weren't there because banks didn't want to take the risk at that time. Now all of a sudden banks, even though they've reduced their lending, they went from lending $150 to $200 billion over a 5-month period to only lending out $30 billion, right? They've reduced their lending 80%. Now they want to say, hey, yeah, we want to go lend money to people that can barely afford their homes, right? They can barely afford a down payment. We want to lend these people money. Doesn't make any sense. It doesn't make any sense to me unless they are, they realize that the ultimate intention is to foreclose on these properties, because a lot of these people that are putting 1% down, they're going to be the first to likely default on their mortgage because they don't have any equity, they don't have any skin in the game. So if when things start to get tough, when things start to get difficult, they'll be the first ones to give the keys back to the bank, right? Point blank, they will, because they have no loss. Right? They got to live in the property, and they might live there and say, you know what, I'm going to buy the property. I'm just not going to pay the mortgage for 6 months, 12 months, and they can foreclose on me. Sure, it'll destroy my credit, but they'll get a free place to live for a year. And if they're, otherwise would have paid 15, 18, $2,000 a month for rent, they get basically to live there. They make money either way, right? They get to live there for a year. They only put 1% down on a $400,000 property. Maybe they put 4, 8, 10%, 4, 8, or 10 grand down, and they get to live somewhere for a year, right? So, I mean, this is a highly risky bet for these banks, and it doesn't make any sense why they would be doing it unless it was staged, unless they thought that there was going to be, some, big plan at the end where they were going to sell their book of business or their, book of bad loans somewhere else. What do you think about this situation? Where do you see it all going? Drop below, hit the like button, add me on IG. And if you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. Don't let one negative item on your credit report destroy a bright future. Go to GreatCreditFast.com. That's GreatCreditFast.com. Catch you guys next video.